Hello, welcome back to my channel Value Investment with Manan Shroff. In today's, we're going to discuss about two trades. One is the TWLO and another company is OKTA. They both are in very good position right now to take advantage. We can generate about 24-27% return per year just buying, not even buying, just by doing secure cash put with these two companies. And I will show you how. I did the one trade last week, Friday, and I think this is a very good way to earn money in this market. So here is my general disclaimer. Let's go back to okay. So right now we are talking about these two companies, TWLO. If you don't know about TWLO, TWLO is a company that provides SaaS service for the communication. So in nutshell, if I would say, many times you will receive the doctor confirmation appointment or, the transaction confirmation, or if you have ordered the food from the Uber, where is it right now? On your text message, you get the text message. All these things being done by TWLO. And TWLO has a very dominating market. TWLO also bought the SendGrid few months ago, and that is also very good transaction confirmation email system. In a nutshell, the TWLO is a very good company. It's going to dominate, I don't know, within next 3-5 years where it will be, but at current price and current quality, I really like these companies. I will show you why I like these companies on the number base. So if you go to the statistic as usual, you can see this enterprise value to revenue is 2.72 only. Just think about that. In March quarter 2022, people were paying 30 times, 50 times, 70 times, and year ago, 100 times. And now it is available for only 3 times. Market is selling crazy. Okay. So this is like a company, they don't make money yet. Earning per share is in negative. So the only way I can evaluate is looking at their positions and looking at the enterprise value to revenue. Enterprise value to revenue for these type of companies, I always look for less than 10. So this is a great purchase if anyone wants to do. But I will show you how to make 24-25% without buying the stocks. Because if you are a long-term investor and if you want to keep the company, still I would think that I will show you the way you can pocket 24% to 26% income for a year. Okay. So going back to the statistic, I like these things. It has a 4.39 billion cash, 1.26 billion debt. So basically, they have a net cash balance about $18, which is great. Another thing I like about the book value. So the book value is around $60. So basically, it's trading near book value. Okay. So price to book value, it used to be 6.77. People were paying 6 times. Now, price to book is almost close to the book value. This is a very good company to purchase at this price. I mean, if you put money in 5 years, your money will grow tremendously. If you use secure cash put or covered call, you will get a very good return. Okay. So now, what I will do, if I want to trade this company, right? Let's say I want to buy $10,000 worth of stock. Let's say I want to invest $10,000 in Twilio. Okay. The conventional method is what? That you have a $10,000 deposit in your account. What you will do is you go and you will buy the shares. So for $10,000, you get 149. So what we want to do is we want to always keep it on a contract in a, because we want to write the secure cash put. That's where you're going to make money, lot of money. So either you have to do this 149 to 200 or keep it as 100. So let's go with the 100 shares. Okay. So in order to purchase 100 share of Twilio right now, you're going to spend $6,700, right? It's a $67 multiplied by 100. Okay, so that is the one way to do the trade. And then definitely Twilio right now is very undervalued based on enterprise value to revenue. You can also see here they're growing around mid 30% revenue. Next 5 year, I'm not sure is this figure is right, 155%, but I will just be happy with 30% revenue growth. Okay. So what I did with the Twilio, okay, now I have I have the very large portfolio. So when I do trade, I do in thousands, okay, but I will just show you the example for 100 shares. Okay, so here what I did is I found out that if I buy Twilio near the book value, $60, that would be amazing price to purchase. I mean, you cannot beat that. So anytime when you buy the book, anytime you buy the business at a book where you are not paying any premium, basically you are getting the whole company for free because you are not paying any premium. So tomorrow if the company liquidated, hypothetically, you should get $59 and you are buying for $59. So that doesn't happen all the time, because what happened that when you dissolve the company, your equipments, your factories, whatever, it's very, very specific to your business. And many times you have to sell it for very bargain price. So whatever asset value is carried on the book value, it's not exactly reflected. But most time with the technology company, it does. I haven't seen his balance sheet, but if they are not using too much goodwill, then this book value is really good. Because what happened that when you use too much goodwill, it inflates the book value asset portion of the balance sheet, and there where the book value get bump up. So I'm not going into that detail. I'm thinking that, okay, if I can buy it, because see, for me, here is the thing. I'm very happy to purchase it 3 times sales, enterprise value to revenue around 3 times. So I'm not going deep into, I'm not going to probably put 10% of my portfolio. I will probably keep it around 2%, 5% of my portfolio. So with that said, the best way to trade this company is you go to bar chart, okay? Okay, so I'm going to write down Twilio. Okay. Now, here, what I did this trade on Friday or Thursday. Okay. So I usually go for 1 year expiration, so I don't have to worry about, you can do once a month weekly, depend on your thing. But within a 1 year expiration also, I'm getting very good return with the TWLO, and that I will show you. So the 1 year expiration will put us for January 19, 2024. Okay. And I want to purchase this near its book value, which is $59. So $60. I want to purchase it at $60, but this is going to be secure cash put. So what I'm going to do is on my brokerage account, I'm going to put $6,000 because I want to buy the TWLO at $60. I have to put collateral as a cash, $6,000. If it's a margin account, then you don't need to put the collateral because it's come from your margin. Okay, so what I did is I put the $6,000 on a side. Okay, then I have to go to the put option. Okay, here and the put option, I have to write the secure cash put. Okay, so basically secure cash put means I have a money in the account and I want to purchase this security, but on my terms, not on the market price. So what is my terms is that I will purchase TWLO 1 year from now if it's trading around $60 or below $60. Whatever, if it's trade below $60, I still have to purchase it for $60. Okay, so that is only down part. Like let's say 1 year from now, TWLO is trading at $35. You still have to purchase at $60. Okay, so that is only downside, but the companies right now is very, very cheap according to enterprise value to revenue and dominating market positions. Okay, so here what I do is I have to write one contract for $60. Okay, the expiration going to be January 2024. They were paying me $14.60 per share premium. Okay, they are paying me. Okay, so here what happened that I'm putting on site $6,000. Okay, and they are paying me $1,460 upfront. So I haven't invested my $6,000. $6,000 cash is on side of my account. And what I'm saying that I will purchase it within a 1 year, it's $60. Okay. Two things will happen. Three things happen. At the expiration, TWLO, January 19, 2024, is trading at $60. Then I will get assigned the share, most likely. If it's above $60, I will not get assigned the share. I mean, I keep it, and plus I have to keep the $1,460 premium. If it falls below $60, then they will assign me 100 shares, and I have to still keep the premium $1,460. So look at here, this is 25% return for 1 year. And if you do, this is a yearly contract. If you do monthly or weekly, you can make more than that. So for TWLO, again, I'm repeating the steps. Put $6,000 collateral in your account. Go and purchase secure cash put. Depend on you are comfortable with whatever purchase, whatever expiration, right? If you want to do weekly, monthly, yearly, I do yearly. I cannot control my volume by just going weekly every single time. So I did yearly contract. They paid me $1,460. From that $1,460, it's mine until the expiration. So after the expiration is also mine, but I'm saying that it's a liability because if you close the contract, then it's your. So the contract will get closed within 1 year. So $1,460, I can invest into the other good companies and I write a cover call on it. Okay. And meanwhile, if it drops down to 60 or below 60, I'm happy to buy. Because see, if you think really here, my purchase cost is 60 because they're going to assign me at $60, right? And then they already paid me $14.60. So my purchase price is for $45. So as long as the Twilio doesn't fall below 45, I'm still at a good position. And if I'm going to keep for the long term, then it doesn't matter, right? So this is a one example. We go to the OKTA. We do the same thing. In case of OKTA, you can see the enterprise value to revenue is 9 times. It used to be 117 times 1 year ago. So this is what I like. Enterprise value to revenue below 10. For these type of companies who are not making any money. They are making money, but they have the loss. I mean, there is no other way you can evaluate this company except enterprise value to revenue. Okay. And then I look for the balance sheet. That balance sheet is not as strong as Twilio because Twilio has a net cash balance of 3 billion, where OKTA has almost same cash and debt is outwriting each other. Book value is around $34. So if I do the same thing with OKTA, right? If I want to say what would be the good price to purchase OKTA right now, it is a good price as long as it's below 10, enterprise value to revenue is below 10. Okay, so now what I can do is I can go to in OKTA also I can do the same thing. So instead of $64.52, I buy, let's buy it at 52-week range, $58. Okay. So we go to OKTA. So what we're going to do, we want to buy at $58, 100 share. For that, you have to keep it on site, $5,800, right? Now we go for expiration of 1 year. Okay, so that is January 19, 2024. Okay. You have to go into the put position, and I want to buy somewhere here between here. Okay, 55 or 60. So I don't have the option for $58. I will go with the $60. The same thing, the one you did with the, let me see if this is the OKTA. Yeah, it is OKTA. So $60, and they are paying you $14.65 premium. This looks like exactly same like Twilio. Let me make sure. 2024 put option 14.60. Yeah. Okay. So yeah, this is right. OKTA is trading. Okay. Let's go by the expiration here. Okay. So what I will do is I will write the put contract, secure cash put contract. Please remember, if you don't know option, just try to learn or call me or ask me before you place the trade. Because what option we are doing, we are receiving the premium upfront. I don't want you to pay the premium. That is the counterparty. We don't want to do that. In that case, we are always kind of in a disadvantage. So here we am putting $6,000 on a side. They are paying me $1,465 premium. So this 1,465 divided by 6,000. Another, again, 24%. So here I don't have to do anything. I just have to write the secure cash put, keep the cash on the side, $6,000 collateral. And I'm sure that the Twilio 1 year from now or OKTA 1 year from now is going to go up, because right now is a very bearish market, bear market, and people just think about it, the market market perception. They used to pay 100 times just 1 year ago. Now they don't want to pay even 2.72 times. So this is definitely undervalued, especially TWLO. TWLO, I will do with the TWLO because one, they are trading next to the book value. Second, they have a net cash balance of 3 billion. And third, their enterprise value to revenue is only 2.72. So this way you can make 24% return on a 1 year. And I will give you the surety that you can make this. And if you're a long-term investor, then it will definitely make sense, because even after 1 year, if TWLO is trading at $35, $30, you still believe in the company. You got the company for $60, plus you got the premium $14 something. So it cost you $48. No, sorry, $46. And the TWLO is trading at $35. So, and the revenue is growing. So enterprise value to revenue go close to the 1 ratio. So, I mean, it's a win-win situation for me. So I did a trade. I got a huge amount of the premium. From that premium, I'm going to buy the good companies, and I will write the covered call. So I just want to share this trade, the one I did last Friday. I hope you like this. I forgot about the OKTA, that what OKTA do, what OKTA does. The OKTA is face identity company. So there is a kind of security. What they will do is they provide facial identity, retina identity, security stuff. So I also like OKTA, but TWLO, at the current price, I'm very sure that you make a lot of money with the TWLO. So with that, please, I just want to request you, if you really like channel, please subscribe. What happened if I reach the 1,000 subscribers? I'm starting to get the Google advertisement revenue, and from Google advertisement revenue, I want to donate that to the needy people. So I don't need money, but I just want to pay. If I get revenue, I can help other people. So with that, I'm just closing this presentation. I hope you like it and enjoy your long weekend. Thank you. Goodbye.